Today is one for the history books for Palantir. Palantir just hit a new all-time high. The community is celebrating. The atmosphere has turned bullish. Analysts are dropping their signals. Palantir just overtook some tech giants today. However, one analyst pointed out something odd, and this might just hurt Palantir. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir fans are celebrating again because the stock just blasted to a jaw-dropping $116 per share, a brand new all-time high. The excitement is unreal. Every day, it just keeps climbing, making skeptics look silly for calling it overvalued or overpriced. Sure, they've been saying that for a while, but guess what? Palantir doesn't care. It just keeps proving them wrong. And analysts? Some are calling it priced to perfection, meaning it's already trading at the best-case scenario valuation. One analyst put it perfectly in a tweet, saying Palantir is now the 38th most valuable company on the planet, and already up 54% this year. But here's where things get interesting. He pointed out that most retail investors, the smaller everyday traders, are selling rather than buying. So who's fueling this insane rally? According to him, it's either a fresh wave of new retail investors or the big institutional players piling in. If it's the big money, that's a game changer, because those guys don't just jump in for quick trades. They bet on the long haul. If they believe in Palantir's future, it could mean even more upside ahead. But hey, maybe he's wrong. Maybe this is just another wild market moment. Either way, one thing's for sure. Palantir is the stock everyone's watching right now. Now here's the crazy part. Palantir just pulled off something unbelievable. With this insane rally, it actually traded more volume than Apple and Microsoft combined. Let that sink in. One analyst pointed out that Palantir saw $7.3 billion worth of shares traded in a single day, while Apple and Microsoft together had $7.2 billion. That's not just some random number, it's a huge deal. Apple and Microsoft aren't just any companies. They're absolute giants, worth trillions, dominating the tech world for decades. Their stocks trade millions of shares every single day because they're the go-to investments for big institutions, hedge funds, and everyday investors. They're basically the backbone of the stock market. For Palantir, a company that just a few years ago wasn't even on most people's radar, to suddenly outpace them in trading volume, that's not normal. It shows just how much hype, excitement, and momentum is behind it right now. People aren't just watching Palantir, they're actively buying, selling, and making massive moves around it. See, Apple and Microsoft stocks are steady, reliable, and rarely experience these crazy spikes in volume. They're like the ocean, constant waves, but nothing too wild. Palantir, on the other hand, is like a storm that just came out of nowhere, shaking up the market in a way that very few stocks ever do. When a stock's trading volume explodes like this, it usually means something big is happening behind the scenes. It's a sign that big money is involved, and people are betting on something much larger playing out. Whether it's institutional investors piling in or a massive shift in sentiment, one thing's for sure, Palantir isn't just another stock right now. It's the center of attention. But it doesn't stop there. Palantir just did it again. It's not just breaking records in trading volume. Now it's officially bigger than Wells Fargo in market cap. Yeah, a 170-year-old banking giant, completely overtaken by Palantir. One analyst pointed it out, and it's honestly wild to think about. Wells Fargo has been one of the biggest names in finance for generations. It has branches everywhere, millions of customers, and a history that goes back to the gold rush era. Meanwhile, Palantir? A relatively young tech company that, until recently, wasn't even considered a major player by Wall Street. And now, it's worth more. This isn't just some random milestone, it's a huge shift in how the market values companies. A traditional banking powerhouse built on lending and financial services just got passed by a data-driven AI company that thrives on software and intelligence. It shows just how much the world is changing. Investors aren't just looking at old-school financial institutions anymore. They're betting on the future. And right now, that future looks a lot like Palantir. At this point, it's hard to say what's next, but one thing's clear. Palantir isn't slowing down. However, despite all the bullish hype, one analyst on Twitter dropped a bombshell that got everyone's attention. And it has to do with something pretty unexpected. How Palantir actually makes its money. Let's just say, it's a little odd. He pointed out something massive. About 40% of Palantir's operating income isn't even coming from its core business. Instead, it's coming from interest on its cash. Yeah, that's right. Not software, not government contracts. Just money sitting in the bank, collecting interest. And here's where it gets even crazier. If you strip out that interest income and look purely at how much profit the actual business is making, Palantir is trading at over 800 times earnings. That's an insane valuation. Most companies trade at 15, 20, maybe 50 times earnings if they're high growth. But 800? That's next level expensive. This kind of thing raises big questions. Is Palantir's stock surge really about its business growth, or is it just benefiting from high interest rates? And what happens when those rates go down? If a huge chunk of its income is coming from something that has nothing to do with its core operations, it could mean the market is way overestimating how profitable Palantir actually is. But wait, here's the thing. Even without that extra cash from interest, Palantir seems just fine. Another analyst pointed out something pretty interesting. Palantir is ahead, while spending less. And that's huge. He explained that this is actually a sign of strength. If a company can grow, innovate, and stay competitive without dumping insane amounts of money into research and development, that means it's efficient. It knows how to get results without burning through cash. A lot of people think that the more a company spends on R&D, the better it is at innovating. But that's not always true. It's not about how much you spend, it's about who's doing the work. He used a perfect example. Imagine you had $10 million to spend on research. Would you rather hire 10 top-tier software engineers or 1,000 random workers with no real expertise? The money spent is the same, but that small elite team will almost always produce better, more valuable discoveries than 1,000 people just throwing things at the wall. That's what's happening with Palantir. It's not just about spending more, it's about spending smart. Other companies might be pouring billions into R&D, hiring huge teams, but Palantir is proving that having the right people matters more than having the most people. So, while some critics are questioning its income sources, this kind of efficiency is a major reason why investors are still confident. And here's the best part, Palantir's innovation isn't just hype. It's actually solving real-world problems, and today, we got a perfect example of that. Palantir's collaboration with Hyundai HD just had a major moment, with its AI-powered route optimization system going live for the first time ever. This isn't just some small tech upgrade, it's a game-changer for the shipping industry. Here's what's happening. HD Hyundai Marine Solution, a marine tech provider under HD Hyundai, has officially deployed Palantir's AI system on South Korean commercial vessels. The goal? To cut down fuel consumption and slash emissions. And in a world where fuel costs are skyrocketing and environmental concerns are bigger than ever, that's a huge deal. Think about it. These aren't just minor tweaks. AI-driven route optimization means ships can navigate smarter, avoid unnecessary fuel burn, and operate way more efficiently. Less fuel, fewer emissions, and big cost savings? That's exactly the kind of real-world impact that makes Palantir stand out. So while people debate the stock's valuation, this is what's actually happening on the ground. Palantir's tech is out there, making a difference. And now, let's get back to what we've discussed in the last video. With Elon Musk's influence on Doge, Palantir might have a once-in-a-lifetime opportunity ahead. One analyst broke it down perfectly, and if he's right, this could be massive. So why Doge? And why Palantir? First, Palantir has a history of digging up uncomfortable truths. Back in 2024, co-founder JT Lonsdale hinted that Palantir had already uncovered billions of dollars in fraud and waste in Medicare and Medicaid, but the government at the time shut it down. So clearly, Palantir has the tools to expose inefficiencies on a massive scale. Now, here's where things get wild. Palantir's government business is still tiny compared to its potential. So where does Doge fit in? The theory is that Palantir could help identify waste and maximize efficiency across departments, unlocking billions in savings. No official confirmation yet, but there are some pretty big hints. Leaks about young engineers from the Thiel Musk network, a mysterious Palantir CTO tweet, and even recent Musk comments that seem to nod toward Palantir. The big question now, will Palantir actually help Doge save billions? Or maybe even more? If it does, this could be one of the biggest plays in the company's history. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.